Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Yat Siu, chairman and co-founder of Animoca Brands, is our guest. He's back on the show. Animoca, one of the most prolific crypto investors in the world. I talked to him last year following the Token 2049 conference from his office in Hong Kong. This year, he joins me in New York, and we talk about Animoca Brands' plans to go public in the U.S. And everything else that they're bullish on. He talks a lot about AI agents and how they'll interact with cryptos. It's kind of an interesting interview. I think you'll enjoy. And we'll talk with our good friend Beimnet Abebe from Galaxy Trading, as always, about markets. Kind of a bloodbath out there in crypto. Bitcoin traded below 100K yesterday for the first time since June. We'll get into it and what to expect and how Beimnet is looking at and positioning. Before we get to any of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Last year on December 31st, 2024, I predicted that Bitcoin would cross 150 during the first half of the year in 25 and touch 185 in Q4. That obviously didn't happen, neither the 150 nor the 185. I've just lowered my target for the end of the year to around 120 as the near-term bullish target. So, you know, we'll come out. Obviously, we're long-term bullish, but me and Beimnet will get into that and what the sort of headwinds have been for Bitcoin this year and why things feel a bit squishy out there in Bitcoin markets. I also encourage you to go back and listen to the episode a couple weeks ago with James Check, one of my favorite analysts that utilizes on-chain Bitcoin data. He said the same thing here, that, you know, sub 100 or even 95 might be a pivot point, a wall that bulls need to defend. Very interesting time, as always, in markets if you're following this saga as we are, and I know you are too. Let's hop right into it with Beimnet Abebe. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So it's been a little bit of a bloodbath. We're back at that feeling, you know? Remember the feeling?
The smell of napalm in the morning?
Yeah. I guess the last time we felt this, although this isn't as aggressive, was maybe in April around that tariff tantrum when...
Oh, there was Octent as well.
Well, that's true, but that was like so fat. That was a different type of bloodbath feeling.
This feels a little
squishy.
Bit more. Yeah.
You've been bearish on, near-term bearish on Bitcoin price for several weeks now.
Yeah.
I think even, to be honest, even before October 10th. But I've also publicly now reduced my end of year target. I think I had 185 is what I published a year ago for the end of this year. And now I'm saying 120 is the bullish near-term target. Even that, I think options markets are saying 22% chance likely of 120 by the end of the year and an equal likelihood of 92 at the end of the year. What's your take on the,
I'm in the 90 camp, or the risks being more skewed towards us going lower. Taking a step back, I think kind of what frames my view about Bitcoin is, it does tend to follow pretty strong, like, technical timelines, right? Like the 4.5-year cycle or 4-year cycle. And I think there are a lot of believers in that, particularly folks that have been in crypto for a very long time.
Yat, coming up the next interview, he says exactly this too, that the 4-year cycle does kind of still exist because there's still a lot of people that believe in it.
There's a ton of people that believe in it. And, I think in terms of like what we've seen by tracking on-chain data, flows here internally is, there is a lot of significant whale selling that it has been happening in the market over the past couple of months. And, it's intensified over the past couple of weeks. And so, there's that high-level framework of there's a lot of whale selling because they believe in the 4-year cycle stuff. And then when you kind of think about the events of October 10th, right, like that liquidated a ton of traders, right, on the long side.
Really like sophisticated retail.
Sophisticated retail, a lot of market makers, a lot of hedge funds. There are rumors of hedge funds that literally got wiped to zero. on
We haven't
Twitter.
seen those bodies float up yet, though. Really, right?
I hear
I
new
mean, like,
rumors every day.
Yeah, but not like on.
Correct.
No one's formally closing their fund or anything that we've heard yet.
We've heard. And so what happens when you have such a deleveraging event is that liquidity goes down in the marketplace, which means that, for every dollar of buys or sells, price moves a lot more, right? And that makes the market susceptible to like very large moves. And when the vol of an asset goes up, right, in theory, if you're running a portfolio, you have to hold less of it. If the liquidity profile goes down, you have to hold less of it, right? Just mechanically. And so you're in a market that's now thin from a liquidity standpoint. And then there's also like a wealth effect from the fact that the alts have gotten absolutely murdered.
Yeah, I think
There's a bunch of alts that are down 50, 60, 70%
I think
on
70
the year.
out of the top 100 coins, including Bitcoin and Ether, the top ones, 70 out of 100 are down 50% or more from their all-time highs at this moment. It's crazy.
Crazy.
I mean, that's a bloodbath out there.
Bloodbath. And for people to re-enter the market, people need hope.
And they need time to
reset. Correct. But where is that hope come from? It typically comes from a catalyst. Now, do I see any catalysts coming on the horizon for Bitcoin? Unless the U.S. government starts buying Bitcoin, I don't really see a positive catalyst for crypto in general.
In the near term.
In the near term.
Yeah.
Right? So there's nothing for people to really latch onto in the near term.
I think that's right. And one of the other points I was making was like, there's been a lot of other good investments this year. Like last year, or at the end of last year and in January, long Bitcoin was like the hottest trade in the world. It wasn't the hottest trade, it turns out, for the rest of the year. You had AI, gold, you could buy the gold.
A ton of other things.
Right? Like it's not that it's not good. It's
Chinese
that
equities, robotics companies, quantum computing.
Yeah, it's not the nuclear stuff was doing well.
Bitcoin at this scale has to compete for attention. Right, with the other asset classes. And right now it seems more like magic internet money than like a prudent investment. That's a little harsh.
At this moment, though, to you. Well, you're you said you're in the camp of more of a 90K bottom, and then
I think the path of least resistance is lower. I think it'd be foolish to put like meaningful targets into place, but I think if you break 100K in a meaningful way, a daily close below, a weekly close below, that definitely suggests lower levels ahead. And your kind of next support areas are kind of like 95-ish, 94.
Yeah, 95 is like a kind of a key level. I talked about this with James Check on this show, where something like more than half of the network, people don't realize this, more than half of the Bitcoin supply now was purchased or last moved on chain, but the heuristic we use, at prices 95K or higher. So that is sort of in a way of saying like that's kind of where the bulls should defend, because below that, most of the network will technically be underwater in terms of their entry prices, using those on-chain heuristics. So it's a key level.
It's a super key level. And what I'd like to remind folks is that markets are reflexive in both directions, right? And so there was a beautiful flywheel earlier this year when DATs were really popular, where a company could sell stock at a premium to the underlying assets. The underlying asset would go up in value, and people would bid the relevant DAT because the underlying went up. And so there's this virtuous cycle that led to more Bitcoin buying. And now what you've seen is the complete opposite, where prices are going lower, and so MNAVs are going lower.
So they can buy less.
Or none, right? In theory, or even potentially sell, depending on who you are.
Some of them we've seen already,
right? And so that flywheel has started to go the other direction.
I think I tweeted that I'm having intense deja vu, because I think you've explained this both as it relates to DATs, sort of a cautionary thing those several months ago, but also we've talked about the reflexivity flywheel and granted,
Absolutely.
I guess at this point we've been doing this show together for like 3.5 years. So
there's not much we haven't covered.
A lot. I think I tweeted once, remember that flywheels can become die wheels?
Yeah.
It was the exact thing you're
like
saying.
doom cycles.
Yeah. I don't think it's quite as doomer as that, but you're right.
I agree, but to folks that have been in crypto, like I remember doing this podcast with you at Bitcoin 16, 17, 18, 19, 20,000, right? And we were bullish then. right? If you're an investor that has caught the ride from 20,000 to 100 in a large liquid asset class, you 5x your money, like there's gonna be some profit taking.
Yeah.
Right.
Right.
And I literally looked at 6 charts today of like equity market valuations, and everything was in the top right.
Yeah.
And so there's a lot of just optimism that has been brought forward, whether it's related to AI, whether it's related to crypto. And so your risk reward doesn't feel great. And I think markets generally trade towards max pain, right? Stocks climb a wall of worry. When crypto's flying, like it stops people out of the craziest things at the worst levels possible. Funding is in your face. And now where I see max pain is really lower because I think there's a significant mismatch between sentiment and positioning. There's a lot of folks that over the past couple of weeks have not felt great about crypto, but
they haven't delevered.
Haven't
taken
delevered.
the position
I mean,
off.
just take your average person that checks their account once they get home at like 5:30 in the afternoon. Like you haven't even really had time to react.
Yeah, you're saying where's the price that gets that person to capitulate, and
Yeah.
that's where you want to be a buyer, basically. as well.
Correct.
Yeah.
And I mean, ETH it moved down 12%
In
in
a
a
day.
straight line during the U.S. session that's meant to be liquid.
Right.
What healthy asset does that?
Yeah.
Right. And I just keep thinking back, I don't know, 4 months ago, 5 months ago, we were at 1,500 in ETH.
Yeah. In April.
And
yeah.
people are like,
Right. I think the sentiment. So we're recording this on remember the 5th of November, Wednesday, November 5th. Tuesday, November 4th, yesterday was that sort of really a bloody day in crypto. Equity markets and stuff were squishy too. But I mean, this was the minus 12, 13% day for ETH that you were talking about. Bitcoin got to what, like 98.9, 99?
Yeah, around 99.
99?
Yeah.
And this is sort of
Herman Cain would have loved that. 999. Sorry.
It didn't feel quite. It felt like at 100, if you're selling 100, you're either getting your money back or say, you know what, it could go lower. I'm going to take that. I wrote it from 20. I'm going to take the 5-bagger now. But it didn't quite feel like the pain. It didn't feel like
It doesn't feel like
I
max
feel
pain.
like we're looking for to be a healthy bottom. It needs to search lower. And so you're looking for like a wick, and I mean I'm more in the 95 camp because I said about this sort of like line the bulls want to hold, but it feels like that it was angry and it didn't feel good yesterday, but it wasn't quite the like fear that, although that characterizes a strong bottom formation. That being said, that crypto fear index is like very low, very much on the fear side.
No.
But is that the right way to think about it? Like, it didn't quite feel like blood in the streets.
It's
time
not
to buy
blood
property yet.
It's not blood in the streets. You're still talking about Bitcoin above 100.
Yeah.
Like we're at 103.5. Like that's not bloody. Bloody is, where's MicroStrategy's average purchase price?
75 or
75,000.
Yeah.
That's bloody.
I don't think it gets that far, but
I
it's the
think
fear that it could.
The fear that it
starts to
could
be
is
the blood
enough.
in the streets.
I think people really need to widen their like range of expectations, right? Like we're talking about in the next 6 to 9 months, a year. Like where could Bitcoin get to, right? Plus or minus 25,000 from here is not crazy,
Right.
So like, that. How much does Bitcoin move on average?
Right.
Your implied vol is like 40. Like
Yeah.
it's totally feasible.
Yeah, you're right.
That you get down to 75. And in fact, like, I would argue that like if you dip below 90, like a lot of people are gonna be like, oh shit, is this
No, I totally agree.
could that be like a capitulation moment?
that
Like it's possible. But
yeah.
I don't think that happens in like the next couple of weeks. I just think that 2026 is going to be very volatile, and you'll have vol in both directions. But I think folks should really widen out, what their expectations
Be prepared.
are. Be prepared.
Yeah.
If you're a believer in the long run, like
You should
like we are,
welcome an opportunity.
right?
Yeah.
I'm putting stink bids in the
Right.
marketplace just
Right.
in case it gets down
Yeah,
there,
yeah, yeah.
right? And just be prepared with like cash on the sideline.
I like that.
And then if you are concerned, right, and you want to maintain your position, you don't want to take a taxable event, whatever it may be, like having some protection structures might make sense. Or, you sell a little bit of upside volatility to finance some downside hedges, right? So there are things to do. I think high level, the simplest thing to do for most folks is to buy and hold.
Yeah.
But there are times where, like reducing your position and improving your average entry makes sense. And I think you're still kind of in that ballpark, particularly if you get a nice little rally back to 110. I think, maybe then you might want to take some chips off the table. But yeah, there's a whole host of reasons to still be concerned about crypto.
Yes. All right. Let's talk about macro real quick here,
Yeah.
because we did have some squishiness in equities. There was a story I think I sent you on Monday that everyone had seen. It was on the top front page of Bloomberg, so everybody with a terminal had seen this about
The 10%
the 10% correction from Wall Street CEOs. Like, they wouldn't be surprised; it would be healthy, right? And I think they're thinking something similar. Like, you kind of got to go down to go up sometimes because we're stretched, right? So you got to give people a better entry that will make them want to allocate capital. But also, you've got, I believe, the oral arguments for the Supreme Court case on the tariffs are today. Now, we won't. I guess we'll get some tea leaf reading based on the questions that the justices ask. I think Treasury Secretary Scott Bessent is supposedly going to be there in the room, which is kind of fun. But you've got the tariff question with China, and then what else do we have? And by the way, did they resolve the tariff thing? It seems.
Yeah, I mean, you get headlines every day, like
Seem
China
like they've got some kind of deal?
loosened the rare earth metal stuff.
Right.
They also loosened the companies that were on the
So it's either
exemption
part of a deal
list.
or it's good
No,
faith to establish a deal.
Yeah, and the tariffs aren't going up. The fentanyl tariff, extra tariff, dropped by 10%.
Yeah.
Like
So
or
some
by-
positive
drop-
movement in the
Yeah,
tariff.
everything's
conversation.
going in the right direction. I think the government reopening is probably the next big positive
as of
catalyst
today,
for the market.
It's the longest government shutdown in U.S.
Yeah,
government history.
and what's happening is there's a lot of money in the Treasury General account that will go out the door
Right
pretty
when it
quickly
opens.
right when the government opens, and that should generally be supportive of risk. So you've got that. But back to your original question,
Yeah.
like a lot of these CEOs calling for a 10% correction.
Yeah.
Like I think that is totally appropriate. Maybe not 10%, maybe it's 5%, but there are pockets of the equity market that are just so overinflated that, it's like, take some of the quantum computing stocks, for example. If you talk to any of the quantum computing experts and the CEOs themselves, they will tell you that they are like 7 years from revenue.
Best case scenario.
Best case scenario. And yet these companies are trading at I think a couple of them were above $10 billion
Right.
for things that don't make any money in the equity world. And I understand for crypto people, that's par for the course.
No, even it's like
but-
the Russ Hanneman thing in Silicon Valley. Revenue? No, my God, no
Yeah,
revenue, right?
correct,
But
correct.
still 7 years out is best case scenario.
And I think that's, it may
Well, it may not.
it could
a lot
be 10.
of so a lot of people
Like-
think quantum may not even ever be possible.
Yeah,
but
and
anyway, right.
And so there's just a lot of pockets that, I think to your average investor is very concerning, but ultimately you need a catalyst for things to actually, break down, and nobody seems to care about valuation. So you could just climb the wall of worry into year end. The seasonals are super strong. Corporate buybacks are, in full effect. The big tech companies have had their earnings. And every day there's a new AI deal that people are hyping up and talking about. But, what I would remind folks is, when you get concerned, having no position is a trade.
Right.
Right? You don't always have to be long. Being flat is a perfectly acceptable trade. And I get it. We're all...
I'm gonna need you to record this. I'm gonna have to wake up every day and
Yeah.
tell myself this, because you're right. People tend to think that long short are the only options.
No, but flat is an equally appropriate option. And when folks are feeling uncomfortable about crypto or about equities, moving to the sidelines is perfectly fine. And if, most likely what happens is, on average, stuff goes back up and you feel much more comfortable buying back in. And on average, if you bought the S&P at any all-time high this year, you would have made money.
Right.
So it's not crazy to just wait and see.
Yeah.
And that's kind of where I'm at in kind of my view of the world right now. Wait and see.
There you go. Beimnet Abebe from Galaxy Trading. As always, thank you so much.
Thank you.
Let's go now to our guest, Yat Siu, chairman and co-founder of Animoca Brands. Yat, welcome back to Galaxy Brands.
Thanks for having me. It's always great pleasure talking to you.
Yeah, we spoke last year from your old office in Animoca in Hong Kong. And a lot has changed, both in the market and for Animoca. I'll start right off the bat with the big news. Animoca is going public on the NASDAQ in the United States via reverse merger. Tell us about this deal. Why now? What is the pitch that Animoca is bringing to public markets?
Well, I mean, first of all, we have to also thank Galaxy, because Galaxy actually was one of the advisors on this one. So, very much sort of appreciate all the effort and work here. I mean, us going public on the NASDAQ, I think is very much a reflection of where the world has changed. If you had asked me a year and a half ago, would you ever consider going public in the US? I would have told you, I don't think so, because, the regime is more hostile. And of course, because of, Trump and everything else that's happening here, America's the crypto capital of the world now. And it's not just because of the depth of capital. It's also that there's so much interest. And if you look at the capital markets and look at the IPOs of Circle, Bullish, Gemini, hundreds of DATs that have come out here in the US, both good and bad, right? It just shows basically the interest and the strength of the capital markets here, and we have to be here as a business. And also, I think it's an opportunity for us to really retell the story of Animoca Brands, who we really are, because a lot of people think of Animoca as gaming and, sort of metaverse, which is still what we do in part, but it's a smaller part of the business. We are, the way we present ourselves, and I think this is why being public is so interesting, is that we're essentially your best levered bet on altcoins. Our prediction is that ultimately, and you know what, I mean, certainly altcoins haven't done so well recently. However, our prediction is that in the mid to longer term, altcoins are going to be larger than Bitcoin collectively.
Interesting. So,
yeah. And my mental model on this one is a Bitcoin is digital gold. So it's very similar to gold, but altcoins is what we all use. We don't join the crypto space because of buying Bitcoin per se. We might as a savings account maybe. But, we use gas fees. We go in because of gaming. We go in because of DeFi. We go in because of entertainment or culture or NFTs. These are the altcoins, right? And what is that in the traditional market? That's the stock market. Those are companies. So NVIDIA or Google or Apple will never be larger than gold in and of itself. However, when you look at the stock market collectively, that's 128 trillion to gold's 27 trillion. And when you add the private markets on top of it, it's another 80, 90 trillion. Over $200 trillion of market cap in essentially the equivalent of altcoins, as in companies that create utility and usage or these kind of network effects. So that's what we think. Now, the other thing I would also say is that a lot of people are like, oh, but altcoins have done so badly, look at what's going on. If you look at individual altcoins, yes. But if you look collectively at the space, altcoin remains at about 1.1 to 1.2 trillion in size, right? Which actually has done sort of pretty well. It's just that it's now distributed over a much larger token base. And, for Animoca, because we've expanded the business, I mean, we have the advisory side, we incubate, we grow projects. We're one of the most active investors out of our own balance sheet, over 628 portfolio companies. I would say 90+% of them all launching a token, which then adds to the balance sheet in and of itself. Our entry price is low as well. So people go, oh, yeah, but this, altcoin is not worth $1 billion. If you come in at 10 million valuation, I don't care if it's $1 billion, because, if it's 50 to 100 million, you still have a good return. More importantly, the markets are more sophisticated. So we are long on the tokens, but we can take a percentage, call it 20, 30%, and we can hedge them, we can trade them, we can do all sorts of stuff with them so that we can generate returns, get our return on capital, and then basically stay long on the rest of the position, right? And today, altcoins represents 25, 30% of the market, give or take, if you take away the majors like Ethereum and Solana and, of course, Bitcoin. But outside of the fact that if you believe crypto is going to be a $100 trillion asset, or 50 to 100, as some people predict, right? If it stays the same ratio as it is right now, it's going to be in excess of 10, 15. If you believe what we believe is that altcoins are going to grow because that's where users come in, it's going to be even larger than that, right? But you as an investor, how are you going to be able to know sort of what sector you should come in? I mean, good luck. I mean, maybe for Galaxy you could do that, but for most other ones, it's like, I have no idea how to play this. I have no idea sort of what the usage is, and nobody's really doing what we're doing. So we think the reason we should go public now is that we can own the space and basically become the true champions of altcoins, utility altcoins. I want to distinguish between that and meme coins, because meme coins are fun and everything, but we wouldn't necessarily be thinking about, maybe there's going to be a sort of a meme coin that, who knows, right? But we're not that. We're basically that. And also we generate profits. I mean, last year, $314 million revenue, $97 million bottom line. And from the profits, we can keep reinvesting. And so we have operating leverage, just to be clear. We don't have debt. We have operating leverage to basically create the best type of altcoin performance that we can.
So, and you mentioned this, that you're basically a DAT for altcoins. I think you briefly said, but I was going to ask then, why not like a liquid hedge fund to invest in all these altcoins? What is the advantage that you have?
So, I mean, to be clear, we're an operating business, right?
Right.
A big component of that is the fact that we have this sort of altcoin long position. We view altcoins similar to sort of the early days of the internet. So it would be kind of ridiculous if you were a fund where you had to basically liquidate your positions on Amazon and Apple and Google and Facebook in 2005.
Right.
You mean like, and we think the era is kind of like, let's call it 2000, 2001. Okay, so, maybe 10-year fund, 2010. I mean, you would have missed out so much on this one. And we're talking about some really, really transformative changes that are happening that are not going to be developing over the next 2 or 3 years or even 5 years. This is something that we think will take decades to really, really form, as we have seen with the majors today. And part of this has to do with our view of where we're going with AI and agentic AI. Token and tokenization is probably the most sort of natural sort of, let's call it AI readable format from an asset standpoint. If you don't tokenize, then as a business, you become irrelevant. It's kind of similar to the days of, if you weren't discoverable on Google, you were irrelevant. If you're not on social media, you're irrelevant. If you're not digital literate, if you're just not on the internet in the earlier days, you're irrelevant. And basically what's going to happen is if you don't tokenize, you become irrelevant, right? And that is sort of in the scope of altcoins. And that's why also we have the RWA joint venture with Provenance, with Nuva, and also we're doing stable coins as well in the Asia Pacific, in our joint venture with Standard Chartered and Hong Kong Telecom.
But you mentioned like how you can hedge and do other sort of liquidity operations. I know Animoca also does things like advisory for.
We do.
So,
yes.
so is that's something that say like, I mean, a liquid fund, I guess, could provide like, some ancillary services to its investments. Certainly venture funds try to.
Yeah.
You mentioned that that's not conducive to a long-term view.
Because they have
deliver.
to liquidate, right?
Right.
And if we invest from balance sheet, we can take a very, very long view. And that's kind of how we think of having better returns. People, sometimes when people talk about sort of SoftBank, they have sort of something like, oh, look at the fund, whatever. But we're talking still about $100 billion, like the biggest fund in the world in some ways for tech. And they were a small company. And what they did was, because they were investing very much in the long term, they got these incredible positions in like Alibaba and like, basically Yahoo and so on. And they had really sort of, or ARM, for instance, right? Mm-hmm. And these outsized positions had really created the returns that allowed them to sort of continue to grow the space. Now, had they kept their positions in those cases, not only would it have been better, and this is the key point about Animoca, in terms of returns, which is great for shareholders, investors, they would have had a very guiding, influential voice. So I think where SoftBank kind of was a bit different is that they were very focused on the trade, which is understandable. That's what they do. We're actually focused on trying to sort of steer the ecosystem in the right direction, we think. And so having these positions gives us a kind of influence and a kind of vote where we can basically sort of help guide these companies as well, because it's kind of early. So that's kind of another way to think of it. It's projection of influence, if you will.
Yeah, I think that makes a lot of sense. And sort of the flexibility and tools that a corporate structure has versus an LPGP structure.
I actually think LPGPs ultimately mid to longer term will probably go away in the traditional sense. And you can see funds already going into evergreen mode, which is a little bit problematic if you're a fund manager, right? Because, and by the way, this is where I think I've worked an LP in fund where you're like, well, your returns could come anytime when we feel like it. That's kind of tough, right? Mm-hmm. And I'm an investor on some of these early evergreen funds, like 500, for instance, an example. I don't think in some of these funds I've received a return yet because there's no need to liquidate at this point, which I understand the issue. So then tokenization is interesting, right? Because if you want to basically have a way in which you have liquidity, you can tokenize the value of that portfolio, and then maybe it makes sense, right? But then still you don't have that long-term view. If you have to liquidate in 5 or 7 years, you're forced liquidating, sometimes in bad timing. Imagine if you have to liquidate in 2023 because the fund mandate said so. Bad, right? I mean, it just doesn't make any sense, right? And the fund manager might say it doesn't make sense, but
my hands are tied.
Your hands are tied, right?
Yeah.
And I think when you deal with volatile assets like this and just general volatility, which I think, by the way, this is not just only sort of crypto. I think all assets are just more volatile, broadly speaking. You need to have that flexibility, and the management becomes more important. And you need to be able to be sort of, have long-term views on stuff, because sometimes it's just better. I mean, if you just held Bitcoin, independent of what's happening over the last 24 hours, right? If you just held Bitcoin over the last 5 years, that would have been an outsized return, even if you weren't like trading or hedging or doing any kind of stuff.
Yeah, I think it does make a lot of sense. And I love to see the breadth of what you guys do. I mean, you said 600 plus investments is incredible. And I've looked because I write our venture report every quarter for like the last, 12 quarters. Animoca is top of the list of most active. It's like Animoca and Coinbase, and I think you're probably more than Coinbase. And I wonder, like, with that view, I assume it's mostly early stage in this.
It's most predominantly early stage, but of course we do follow-on rounds as well if that happens. Yeah.
Right. So, but where would you say, maybe can you divide the last few years into sort of phases, if there have been phases of like the hot trends in early stage companies or protocols that you've been seeing, and where are we now?
Well, I mean, I think we cut our teeth early with NFTs, metaverse, and gaming. That's kind of what we were known for. But that's also because we were a gaming studio in the early days. And that's why we understood that best. But, we've done sort of, agentic AI, sort of AI. Deepin was a big trend that we're continuing to invest in, L1, L2s. And the way that we got into the space, by the way, was, like, for instance, take the gaming sort of narrative and NFTs. It wasn't until DeFi summer where you came and realized, hold on a second, actually it works because of DeFi. It didn't work because of just gaming and having NFTs, right? And then we realized, wait, hold on, maybe we need to invest in lending protocols to facilitate that as well. And then, the infrastructure that provided that were the L2s mostly. So, okay, we need to support these L2s because they're the ones who can build the infrastructure around that. And so next thing you know, you're realizing you're actually sort of branching out into multiple areas that originally, in the traditional world, these tend to be siloed for many reasons, right? So, if you're building a game, you wouldn't be thinking about investing in the next sort of AWS infrastructure because it just doesn't, or you would be looking at investing in, say, sort of Unity, for instance, just because you're a game maker. They tended to be separated because there were no natural tie-ins in this way. It didn't seem logical. But in blockchain, it's different because network effects are very much intertwined, right? So the effect that you have, if you're a very successful game on an L1, L2, is outsized, right? And we've experienced that. When we start bringing our gaming portfolio in the past into an L1 or L2, the value drives in terms of the interest and the attention, which then drives the value of the token, is significant. And for instance, I think it was like last week where we announced that we started buying Aerodrome and becoming a major voter in this one. And the token, despite the whole market going down, went up 10%, right? So there's elements around that as well where we can sort of, again, project some of our impact to those ecosystems.
Yeah, there's a lot of synergy that can be had, right? Especially if you're investing in multiple parts of the stack.
And I think the criticism that people say, spray and pray, you guys are just kind of investing all over the place, right? And what people don't understand in blockchain, you can much more easily invest in these startups because you don't have the heavy lift of the infrastructure. I mean, even when you're building a game, AWS wasn't enough. You needed someone who understood server infrastructure. And actually, if you remember the early days of the internet, I mean, I was running my own Apache servers, and I had to run basically SMTP servers, and I had to basically run like a Linux server that I built myself. Like all these things is a heavy lift. You needed all these people in house, and then came AWS, and actually, what happened with blockchain, with essentially Ethereum or Solana or as an infrastructure, suddenly all of that super heavy lifting infrastructure was just done. Like you had basically a banking grade sort of secure based infrastructure that can deal with assets like money without actually having to hire the most efficient and most experienced database guy in the world, who used to work at Goldman Sachs, right? Like and that mass amortized that access. And so it's much more easily and scalable to do that, which I actually think, from my perspective, I think we need to do much more investments. I don't think it's less. I don't think there's such a thing as let's go for the one winner or let's go for the 5 best companies in the space. I don't think that works in crypto.
Yeah, how multi-chain from the infrastructure standpoint do you think that, I don't know, some future end state of this ends up? I mean, you've got a couple, I would say a couple blockchains and L2s today that have significant usage, but a pretty long tail of additional options that don't really
Absolutely.
have. Do you think are we talking about 50 chains? I mean, where does it? How much infrastructure do you think is needed for that future where you have to tokenize or be forgotten?
No, I mean, I think first of all, there's a differentiation between sort of chains and essentially sort of tokenization. I think everything has to tokenize, right? Like everything has to be tokenized, or your business has to have a tokenization strategy. Otherwise, you become irrelevant because you're sort of unreadable to that digital economy, particularly when it comes to agentic AI. But also, as more people go on chain, If your asset isn't available, you can't own it, right? To me, it's like distribution. It's like if you want to enter the American market, you got to be discoverable, right? If you want people to find you, you got to be on TikTok, right? So if you want to be discoverable in the world of crypto, if you believe billions of people are going to be in crypto, you have to be discoverable. So I think there's not really a choice around that, right? But I think when it comes to chains, so my mental model on sort of L2s, for instance, is like ISPs, and L1s is like telcos, right? And so they're valuable. Like, AT&T is what, $20 billion or something? That's valuable. But in comparison to Apple, Facebook, or Google, who leverage that infrastructure, they're smaller because most people won't care what that infrastructure is like. Like in the future, if we have true mass adoption, we're not going to have people caring whether it's built on Ethereum or on Solana or on various L2s. In fact, they're probably building on L2s, security layer provided by something like Ethereum. Great, fantastic. But the end user is just going to be user product. It's going to think about it. They're not going to think about NFTs. It's digital collectibles. In the same way that we don't talk about MP3s anymore, we just have music, right?
Yeah.
So I think that's kind of what's going to happen in the mid to long term, and that's where we have success. And all of these systems will grow in value, but ultimately the systems that we use on a daily basis will capture most of the value because they have most of our attention.
You think that's games, it's front end user
Entertainment,
applications,
front end user,
Yeah.
and the difference is they're going to be much more financial in nature because of blockchain. And, one of the, I would say, if you think about blockchain gaming, I think one of the things that was a bit of a miss in the early days of blockchain gaming is the integration of finance wasn't truly thought of and integrated in that sense. And the traditional game developers, who many of them are actually quite socialist in their thinking, right? So they just don't like money, and they don't like how money could usurp the sort of fun in the entertainment. They were sort of railing against it, when in fact the whole point about basically blockchain is money was made to be fun. So, what we observed, and this is why we're sort of investing in the space the way it is that, money is a game in itself, right? And it becomes more real because you have something at stake. So that's kind of one element. And when you think about Gen Z doesn't trade like older people do, a millennial generation, shall we say, where we think in terms of, well, this is my asset class, and or like you get worried when you're liquidated. I'm not saying you want to be liquidated. My point is that it's viewed more like a game rather than a job, if you will, right? And, this also comes in partial because the younger generation has grown up in an area of much more abundance. So the mindset is generally thinking more along those lines, right? Versus older generation grew up in a time of much more scarcity. I mean, my parents' generation, going even extreme, even had to worry about food on the table.
And world wars. And,
yeah, exactly, right? So you come from a completely different environment. So we treat these assets differently, right? So that's why when you look at whether it's hyperliquid or when you look at polymarket, one way to say, prediction market and DEX. Another way to look at it is just a new kind of game, right? Just a more sophisticated game with different rules, but it's gamified for that attention. And so I think the world of finance is becoming gamified because all of our kids have grown up in the culture of games. So you speak that language, right? And if you don't speak that language, then essentially that audience is invisible to you.
Yeah, I think you can definitely see that in like the mobile UXs of things like Robinhood.
Absolutely.
And
yes.
Even Fidelity, where I used to work, they have their mobile app is just. It's not so much that they've added gamification features. I'm not getting a gold star when my stock gets up or anything, or social points or whatever.
Right.
But the feel of it feels friendlier and more interactable. It's not like calling your broker at PricewaterhouseCoopers.
But you have leaderboards.
Yeah, that's right.
I mean, and the leaderboards is essentially another form of social kudos.
This is
right?
a major thing, by the way. That I remember the Poloniex leaderboard. They have the Troll Box. They have the BitMEX at a leaderboard, right? This is a major thing. Hyperliquids obviously is followed.
Yeah, and so all of these are essentially just an example of essentially gamifying it. But you could say it's not the mechanism of gamifying just because of the psychology. It's what that generation knows and understands.
Yeah.
We're speaking their language.
It's very interesting. Let's pivot just a little bit here. I want to talk about the market this year. It's been we're getting a lot right now as we record here on November 4th. It's Bitcoin is at 101K. Mm-hmm. And I think this is Phineas. Wasn't this basically the price when we recorded with Michael Saylor in Miami last December? So some people, and I'm sure you're getting this from your network as well, are saying, what the hell, man? And also, or even if it's not, if they're not upset, it's just what is happening. Mm-hmm. How would you characterize this year in crypto markets generally? Because it obviously started with almost unbounded optimism with, we know that the new administration is coming in the U.S. We don't quite know what they mean to do, but we're pretty sure it's positive. And we got really bid up, and then we've sort of been, up in the tariffs, and it's been all over the place this year. But as we sit here, we're almost, flat year over year.
Yeah, I mean, I guess I could sum it up with one word from our perspective. It's Trump, or the Trump effect, if you will, right? And, I think while Trump has been incredible for our industry, there's also been moves that have been made that have been very damaging. So, the verdict on Trump, and I think it's very reflective on where the price of Bitcoin is, as in flat for the year, is 50-50.
Yeah.
Right? Okay. And I think the reason, and again, I don't believe that the policy changes or the things that are made around were unrelated to crypto. The policies around crypto were incredibly positive, right? It's just that the other policies around tariffs, and especially what's going on with China, and all of these sort of other actions that are taking place, actually have all sort of been negative for crypto. And in particular, so I think this is the thing to understand. I mean, you know this very well, of course, is that it's very much been an institutional era of crypto for the most part. That means new retail hasn't really entered. If you look at, for instance, the growth numbers on things like Coinbase, it hasn't been that fantastic. I mean, it's growing, but it's not like, post-Trump, we've grown our user base by 300%. No, right?
Yeah.
It's not like TikTok, right? So it hasn't had that effect. So the exuberance and excitement on token prices actually came from the same people who already had crypto. Right?
Yeah.
But then, start of the year, Trump coin followed by Melania really wrecked the market, and there was some recovery around this time. And then, of course, the mass liquidations that took place, somewhat triggered by tariffs and other things altogether, really sort of caused a lot of damage. So the very people who were trading these assets are actually no longer in the market or really struggling to do so. And so really what's propping up the market, I think, is in large part the very tokens that are held institutionally. You could say, oh my goodness, Bitcoin is flat. But actually, if it wasn't for the ETFs, right, that are out there, Bitcoin would be lower, right? And the same is true for Ethereum. I mean, Ethereum, actually, I think net on net, I think start of the year was more like in the 2000s, I think it was, right? So it's still doing better than before because you have DATs and you've got people like Tom Lee basically championing the cause. But broadly speaking, it hasn't been as good as people had hoped because the existing retail side, the degen traders, actually are the ones who have suffered the most. Yeah. And I think the point is that, they were very optimistic. Crypto, to me, is like an open poly market. The sentiment is very clearly visible. Yeah. Right. And if you're looking at tokens and how they move, it gives you an indication of the sentiment. And right now, because of the elections, and we don't know what the results are at this moment in time, but I think most people would say, and if you look at poly market, it's not looking good for Trump, right? Which then puts into a lot of questions. This is a referendum on what possibly could happen in the midterms, which is not a good sentiment for crypto, although I would argue that it's oversold because everyone's worried about the Warren effect, so to speak. But crypto has, I think, become much more bipartisan.
Yeah, so maybe a pendulum swing back away from the supportive political environment that crypto has had. You're saying that these elections, municipal and state elections that are happening actually today in the United States, including in New York where we are,
yes,
if they don't go well for, I guess, crypto supportive or even Republicans, that it could portend also that the midterms may. By the way, midterms tend to go against the sitting president's party, historically speaking.
Yeah, but I actually, so I think that's the narrative. And again, our industry is very narrative driven, generally speaking, right? Tokens are basically sort of indications of attention and narrative, and so people believe that. By the way, I think that's uninformed. Right, I don't think Democrats are as anti-crypto as it is. I mean, depending on what happens in these elections, nothing is so clearly indicative of the fact that they're really against crypto per se. It's not that they've gone out and said we don't like this at all. I think the negative perception on this is mostly because they don't like that the Trump family is in this business, which is a bit different from saying we're against the industry as a whole, right?
I think that's right.
Yeah, and that's why I think that's being translated this way, and that's why people are sort of coming out. The other thing, of course, is that people are talking about the cycle, right? And everyone's like, 4-year cycle, we're hitting this, we're at the end of this. To me, that's a little bit religious, right? It's a little bit like, if it's to me, it's kind of the equivalent of sort of, it's like Mercury retrograde. Okay, we got to do something, right? It's like, and these cycles sort of are very belief driven. But I mean, Bitcoin started off very much as a belief system, so it doesn't surprise me at all that we are and it's part of the calculus.
Yeah.
Right? Because who hold these assets are the people who believe these cycles. And if they believe these cycles, it's almost a self-fulfilling prophecy, but they hold the asset. And if they say, oh, I believe in the cycle and they're going to sell now to buy back later, then it's going to happen for the time being until we have more wider adoption and distribution away from sort of that group of people.
Yeah, and I think we've seen it, at least in Bitcoin. I mean, most cryptos aren't that old, but Bitcoin's 16 and a half, 16 and three quarters of a year old. Ethereum's, 10 years old about? So it has some early OGs that own a lot. We've seen significant distribution by early holders. I was just pulling some numbers before we talked, and if you look at coins that were 5 years, haven't moved in 5 years or more, so 5-year revived supply on Bitcoin, the last 2 years, the totality of that metric, 43% of all Bitcoins that have ever moved in that metric moved in the last 2 years. But if in dollar terms, it's almost 80% of the value that ever was dormant for 5 years and then has moved in the last 2 years. Unprecedented distribution. I think Jordi Visser called this in a piece over the weekend, Bitcoin's IPO moment. Not meaning yay celebrate, but more like that's when the early investors exit to the new believers, and it's sort of a necessary hurdle for maturity of an asset.
I agree, though.
Yeah.
You need to have much more distribution, more widely held at this point in order for Bitcoin to reach that next level. Not just because you're creating more believers, but also, frankly, to break some of these cycles around the assumed traditions. Like having, the sort of the whole celebration on having, to me, is like Christmas.
Yeah.
It's great. It happens, and it's become a tradition, right? In many ways, because the impact of having, honestly, I don't think it has an impact the way that it used to.
That's right.
Right, just because of how many more Bitcoin can.
It's a tiny percentage.
It's a tiny
reduction.
percentage, so it does make sense. However, it's a tradition, and the same people who have followed this tradition continue to do this. As humans, we do this all the time, right?
Right.
Like if we grow up as a family and that's a tradition, whatever
You
that is,
celebrate the tradition.
You still have a tradition, right?
Yeah.
Like we have turkey and Thanksgiving.
Right.
Why?
No one knows.
Exactly.
Supposedly there was a banquet or a feast that happened, 275 years ago.
Yeah, exactly, right. And we decided to adopt.
I'm not even actually sure that happened. Maybe
Yes.
it did. I'll believe that I wasn't lied to.
Yeah,
but,
exactly. But the
but
thing
it's
is,
purely tradition.
it's purely tradition, and then somehow we never break it because it's just part of that. And so if you're in that set and you keep going, then
And then Bitcoin has this outsized impact still on the market, right? In crypto, it's not, and they're different, and there are interesting other utilities. There's a wide. I mean, somebody told me there was 35, 40 million coins in existence. At this
I think
point.
the simplest way to think of this is that at the end of the day, it's about trying to analyze and understand human behavior. And we are affected by storytelling. We're affected by narratives. We're affected by traditions, by our legacies, right, in question. And unless more Bitcoin is being held by an AI agent, we're not going to change the narratives of the space. And if most of the Bitcoin is held by people that view these as norms of traditions, whether they're logical or not, because most of our traditions are technically not logical, right? Then that's the reality we face, right? Mm-hmm. And so I think people need to understand that at the end of the day, humans hold the asset. And so human behavior is what we need to know more than the asset in itself. And I think a lot of people in crypto don't understand this because they say, well, code is law. Sure, code is law. I get it from a rule standpoint, but who holds that digital asset? It's still a human.
Yeah. I think that makes a lot of sense. And that, that's sort of you're saying this in response to our discussion about like the weakness that Bitcoin is showing in the sort of, I'm not saying it's necessarily Bitcoin dragging down the market, but very hard for other coins to, perform well when Bitcoin is sort of squishy like this. But we're sort of saying that as we'll react to that. Yeah.
Let me respond to that. So while it is true that, of course, Bitcoin is macro and it's larger and so on, actually it's an opportunity for, call them slightly smaller tokens or altcoins as it were, to stand out, right? So I give you an example, for instance, after the flash crash, one of our tokens in our ecosystem called EDU, Open Campus, went really, really low. But actually what happened was that a lot of people saw a buying opportunity because it was low enough. We ourselves consolidated some of that position as well because it just seemed like ridiculous. And it is one of the best performing assets since. In fact, even today, after today's crash, it is higher than it was post flash crash.
Wow.
Right? But that comes down to the fact that we had conviction and other investors had conviction that this was a good token, right? Because it was, in this case, building stuff out in student loans. It's much smaller. We're talking about a $120 million market cap token. So, this is not like anything at a Bitcoin level, right? But if you have conviction, and that's why I say institutions are important, if an investor or a set of investors have a conviction, they don't care if the market cap is 10 million, 50 million, 100 million, 1 billion. They're there for the long haul. And that's why being in the capital markets and being public makes sense, right? I mean, Tesla wouldn't be where it was if you didn't have long-term investors who had conviction, or any company that's out there, for instance, right? And, I look at and this is why the US markets are so powerful, because you have institutions that can take a long view. So there's other stock markets in the world. I often give this comparison between the Taiwan stock market, which is a pretty dynamic stock market, but it's all retail. There's not much institution. And then basically the US stock market, which of course has retail too, but has institutions. Broadly speaking, the American one is much stronger because the institutions can take a long view. Taiwan has no institutions and it's very retail, and it trades like meme coins.
Yeah, it's very frenetic and volatile.
Exactly, it's very frenetic and volatile. A little bit like I guess their parliament in some ways, right? But the point is that's the point that we see.
Right.
Crypto has been, and particularly altcoins, have been so much driven by sort of the degens and the retail side. And now what's happened is because many of them have been smoked basically over the last 20 years, unfortunately. The institutions coming in, backing specific tokens, are the ones that are rising for the most part, right? I actually also think that's one of the reasons why, for instance, Hyper is doing much better, because, it's not just individuals, it's actually institutions saying, I like this, I see the future. There's a long-term perspective, right? So that's a much bigger token, but as an example, people are holding on to this. And in many ways, you could say, yeah, Ethereum isn't doing so well, but it's doing well, it's doing relatively better from the start of the year than Bitcoin, for instance. And again, it's because you have institutions holding it.
Interesting. I want to ask you a little bit about sort of the I wouldn't call it divide, the differences between the East and the West. Animoca is headquartered in Hong Kong. What are the differences in crypto? I mean, obviously there's a whole giant region of different builders and investors, but how would you sort of characterize the two markets?
So,
and I guess we're just I'm leaving Europe right out of this.
Yeah. No, so Asia is much more. Has a huge retail component.
Right.
By market number is the largest in terms of number of users, and I would argue still the largest in terms of growth, right? And I would also say that there is not so much of a divide between the perspectives on capitalism. That's the other thing. So people in Asia, Japan accepted, are very, very happy to be making money, and openly so, culturally, versus, let's say, well, Europe is one side of the extreme, which is, you make money, but you don't talk about it.
Yeah.
And most people don't understand it. I grew up in Austria, so I have some experience around that. Like a dinner table conversation, you don't talk about money. You don't talk about the price of real estate or an interesting investment. Most of my friends there would look at me weirdly and say, is this all you care about? Dude, I just it's interesting.
Yeah, you're like, it's not all I care about, but
exactly.
I just find it interesting.
I find it interesting. You talk about, the value of things, right?
Yeah.
Whereas when, and in US, I think it's 50-50, right? Which somewhat can be divided between really the two camps, red and blue, in many cases, but not necessarily always. And then in Asia, you go to Hong Kong, you go to Korea, you go to Taiwan, you go to China, it's very normal to talk about the price of things, right? And this is the thing. I remember sort of when I first came to Hong Kong, 25 years ago or something crazy like this. Oh my goodness! And coming from a place like Austria, and I was in the train going to Shatin, which was on the way where they had one of the horse races. I wasn't going there to see the horse races; just happened to be in the train to go there. And a father was teaching us, maybe 5 or 6 or 7-year-old kid, how to bet on horses. The European in me was like horrified. I was like, what are you doing, right? You're turning your son into a degen. Oh, it's terrible, right? But I came to realize afterwards, that's just the culture. He wasn't turning him into some addicted gambler. He was just teaching him about his ideas of taking risk and whatever, and it was fun, and it was a family event.
Math,
right?
and...
Yeah, all that kind of stuff. And then when you walk in the streets, and you probably see this in Chinatown here as well, I presume in some of these places, the sound of mahjong, sort of, the sort of, I guess it's kind of like a Chinese poker, right? The mahjong tiles, the clanking of that, right? And they're all having fun and basically betting a little bit of money, right? Table stakes, right? And it's fun to do so, right? So the culture and the relationship with money is much more healthier. So introducing crypto in that space is much easier. And, look at the space. So many of the founders, whether they are overseas or in Asia, clearly, are essentially Asians. Right, because of their natural propensity towards it, right? So you have a lot of them. Just look at the biggest exchanges in the world. Chinese, right? For most part, Hyperliquid. Today, Singapore, basically Chinese, right?
Yeah.
Hokkien, but doesn't. They're all part. It's all part of that.
Through Binance, OKX, right? Even Yeah.
Yeah.
Hyperliquid.
Yeah.
Many.
Yeah, and then you look at Korea, for instance, right, which of course doesn't have free flow of capital and more capital control, so it's all very much contained. But something like 60% of the youth under 30 generally have sort of trade crypto, right? And
Is that high?
it's super high, right?
Wow.
Which is also the reason why there is such a political topic, because one of the reasons crypto trades so high there, I think at the start of this year in Q1, Korean won was traded more widely than US dollars.
Wow.
Right? For a very brief period of time, right? And that's because you don't have capital gains tax on crypto assets. And why is that? Because the young people are trading them. And if any politicians out there saying, well, we need to tax your asset, oops, right?
Yep.
So that's why it's constantly deferred. I mean, they're trying to fix that, but the thing is, it's tough, right? If you want to go into power, you want to make sure that voter base goes there.
So they
and
keep bringing it up, but then not following
yeah,
through.
so it's still there. It's still there. So they're trying to do something, but it's still there, right?
That's super interesting.
So again, the same thing, right? And much more sort of obvious attitude around that. So that's a real different perspective, which is why, for instance, play to earn in Asia and blockchain use in gaming, for instance, is very much welcomed in Asia, right? You've got big companies like Nexon and NHN and Sega and Square Enix all looking at blockchain games, and European and Western companies are like, no way.
Yeah, that's so interesting because like Ubisoft, famously was gonna do something with NFTs.
They're the only ones because
they were gonna, but didn't they also their users revolted at one point or something?
Exactly,
Yeah.
and they hated it and stuff.
And everyone's like, when are we gonna get NFTs in Fortnite? And like Epic is like not interested apparently or something.
Yeah, but also I think for Fortnite they make so much money basically not
Totally.
on NFTs, and actually NFTs would be arguably
It would probably take
dangerous for
away
them.
revenue from them.
Well,
but
I mean, if they if they thought of themselves as a platform, no, but they think of themselves.
I agree with
essentially
that.
as a capital
I had
network,
thought that because they sell so I forget I think this was the stat. It's been a while since I cited this, but it was something like in the first year they sold like $4 billion worth of aesthetic. I mean, what are they called? Items, items, in-game items, and skins.
Yeah. Which you couldn't even trade and sell. By the way, you know what happened with the whole sort of Counter-Strike skins in Steam, right?
Yes, they just rugged or something.
They
didn't
literally they changed the rules.
Because people were figuring out how to trade those sort of on black markets, right?
Well, so they had their own marketplace, right?
Yeah.
And then you had people literally coming up with market makers. I mean, we're talking about $6 to $7 billion worth of assets essentially in a closed ecosystem, right?
Crazy.
And they're like, we don't like this because they weren't making fees on the assets trading outside, and they basically did the equivalent of basically a kind of QE, if you will, where basically people who didn't pay for these items could somehow earn them differently and suddenly devalued them, creating sort of a mass drop. I mean, basically they devalued the ecosystem.
This is kind of what Vitalik talked about
about Warcraft.
Yeah, about Warcraft.
Yes, exactly.
It's so interesting because you have this. It's the same thing to Fortnite, but I guess that would definitely apply here with Counter-Strike.
Yes,
they think that they're losing money, right, by not owning the entire, or that if they were to open it and make it a vibrant economy, that they would lose control over it. But don't you think it would grow that much bigger?
Well, it's the difference between a closed market and a open market. I mean, it's kind of a North Korean move, I would say, right? Like in the sense that, it's like this doesn't benefit the state.
Right.
So we're going to clamp down on it, right?
Right.
And these large organizations are the new state. Whether it's called Apple or it's Epic or it's, Steam or Valve.
Certainly in their domains, which are vast.
They are.
And they're digital worlds.
I mean, they are digital kings in a digital world, and they decide whatever they want. And people are realizing, wait, that's an issue. And like literally people are like picket fencing and saying, I want my assets, and to restore it. And they're like, I don't care because they don't have to, right? So yeah, so it's already happening. And that's why I think essentially blockchain, crypto, NFTs, even if they're not going to be called that, are so critical. But people don't understand that they can secure it that way. The moment they can, that's when they get red pilled.
All right. So maybe I think we've touched on a lot of what you might answer here, but
Sure.
Step back, call it 2030. So 5 years from now, how do you think either gaming or tokenization, we haven't really specifically talked about tokenization, how does the world look different for us in Animoca's world? Like paint us a picture of where you think we're headed yet.
So I think by 2030, that's like 3 or 4 years away, right? Everything's going to be tokenized, or everything is going to have some kind of path of a token. And we're all going to be using AI agents in some form or fashion, whether it's 3, 4, 5, 10. I'm of the view, for instance, that we're not going to have one AI agent. We're going to have different ones doing stuff. And they're all going to be dealing with crypto assets. It's a native currency. They're going to be trading with each other, doing stuff. I actually believe that these AI agents are going to do much more than just dealing with sort of, let's trade an asset or something. They're going to take care of shopping, paying of bills, do that kind of stuff. And how do you take care of your bill? Well, you need to have some way of having money. How to do this money? Oh, it's going to be a stable coin.
Yeah,
right?
we don't think it's going to be an API into a bank, right? It's not,
No. Right? Okay, right? And I think one of the other things is also you have to trust the platform as well, right? So and again, when you think about and this is the other thing, for AI agents to really scale and in a massive way, you need a rules-based system. So my mental model on AI, especially when you think about hallucinations, they more and more mimic human behavior, right? And they do crazy stuff. So what is the mechanism that actually keeps AI sort of, let's call it, in a rules-based system? Blockchain, right? So, and we have this in the human construct. In the human construct, it's called the law, and we have government that enforces the law. And humans hallucinate all the time, by the way, right? We innovate, we create crazy stuff, we fantasize, right? But we have laws that keep us grounded so society can operate. And that's basically what blockchain will do to that. And I think that's going to extend the world, and they're going to be trading all sorts of tokens, mostly altcoins, right? Bitcoin becomes a reserve asset. It becomes essentially your collateral asset, right? That's its biggest value. Ethereum is going to be, one of those places where you have essentially the highest TVL, the greatest security, and everything's building on top of this, whether it's an L2, L3. I think there's going to be a ton of app chains. So my view is that we're going to have, millions of app chains, not because app chains are sort of, like the biggest and best, brightest innovations, but because they're best way for applications to interface, right? They're basically the open API frameworks that you can build. And anyone can now build a kind of API interface by launching a chain rather than, building an SDK is tough. I mean, if I wanted to open my network of some form, it's kind of hard. And now, hey, through blockchain, I essentially create primitives that you can develop on top of. And that's the power. Because when you've got something on chain that's open, a third-party developer who is vibe coding his way into it, he doesn't even have to know how to do the code. He's like, I'd like to do this, and I want to draw the data from that. And then because it's interoperable, because it's basically all on chain, and we won't actually bother about, where the asset sits, which is already getting better and better by the day. You just know that it's going to work, right? And the app chain reduces cost. The app chains also allow more composability with certain restrictions that you may or may not want to do, right? So I think it's going to be an on-chain world all along. I do believe we're going to have much more activity on-chain than we're going to have it on centralized exchanges outside of trading, right? And the utility use cases will go. So I think we're going to hit over 1 billion people on-chain.
So why outside of trading, though? You think trading, like the top of the Binance order book will probably still be the most liquid, the tip of the spear in markets, or?
Well, when it comes to trading, I don't think you can compete with a centralized exchange in terms of efficiency, right? But at the end of the day, you want the transparency, sure. But if you want to trade super fast, I think centralized exchanges will all have
or at
support
scale.
base. Yeah, at scale. You want that. There is something to be said around having that kind of centralized efficiency, right?
So like volume, though, like the average person or their agents needing to like, oh, I've got this asset, but I've got to pay Alex's taxes, and they want this asset.
Oh, that you can do that on chain.
Yeah, and that's not like but for big deep like liquidity.
I mean, if you want to go and trade
centralized?
large amounts, and you want to do it quickly, fast, and I think no matter how quick you can do it on chain, I think a centralized exchange offers value. Also, at the end of the day, they become there's more regulations. There's going to be some kind of security attached to it. People will be more comfortable. I don't believe in a world where everything goes sort of decentralized, right? You just need to have enough of it being decentralized.
Yeah.
However, because the primitives are on chain, people can start building things.
Yeah, anybody
digital
can build
identity,
something. Yeah.
all that stuff. So it becomes really, really powerful and important. And I think it becomes a really strong enabler for smaller companies. When you think about what open source did for code, it completely democratized. Essentially, a 2 or 3 person organization could like literally take on the largest organizations in the world because they've got this pool of assets or knowledge. Well, basically, what tokenization and blockchain does, it basically opens up this entire world of liquidity and financial assets in a way that we've never done before. And the overall prediction I have is that the world becomes significantly more financially literate. And so, imagine if you have over 1 billion new people in the world that are now financially literate in a way that today only the top 2 or 3 percentile are, right? And not only are they financially literate, they have a stock portfolio. I think the global, or a token portfolio. If you think about right now, I think the stat I read was globally, and of course exceptions in places like New York would be different. The global percentage of people that have a stock portfolio, any kind of investment, is less than 10%, right? That's crazy. And yet we say we live in a capitalist world when only 10% of the world are truly capitalists. And yeah, New Yorkers are capitalists, although you guys are probably going to have a, less capitalist.
I think we're like probably an hour away from finding that out here on November 4th.
Yeah, exactly. Who knows? But yes,
Yeah.
right. But New York being a bit of an exception, the rest of even if they sort of vote Republican, they're probably not capitalists because they don't have a portfolio. They're not
Novo
invested.
talks about these stats all the time in the U.S.
Yes.
too. It's some tiny percent. I mean, some
Yes,
small percentage.
exactly.
Especially if you take out like retirement assets, which,
Yeah.
by the way, are in some cases required by law. It's not like it may
Yeah.
not even. It would be less probably.
Exactly, right. So they're still sitting in their mind in a labor economy because they don't understand money, right? And that to me is a transformative power, right? Imagine what the world will be like, and especially with AI, because AI will help you with these decisions and it can teach you that kind of stuff. When you have such a large percentage of the world that is now financially literate, you'll have less financial scams because they kind of know what's going on. I think it'll change some of these rules as well. If you already understand money and investing, then do you really need to have some of those high net worth type of rules?
Oh, like
right?
accredited investor,
Accredited investor type of stuff, right? Maybe it's different. Maybe we can move the needle a bit. Yeah, because really that's some of the opportunities around tokens, right? And of course, assets become more distributed as well because now I can buy assets in America when you have an RWA that could give you access to, certain kind of yield generating products that are in different countries. Right? There's just a much more wider form of distribution that you can have as well, an opportunity. I think the world will become more capitalist because of tokenization.
All right, well, let's end it there. That was phenomenal. Thank you so much, and congratulations on the impending reverse merger and listing in the United States.
Thank you.
That's it for this week's episode of Galaxy Brains. Thank you to Yat Siu, our guest, chair and co-founder of Animoca Brands, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.